You may have seen headlines recently claiming that JP Morgan has issued a $1 trillion warning. That phrase sounds serious, and for many people, it sounds alarming. But that headline is misleading. So let's break this down clearly and explain what is actually being said. The first thing to understand is this. The $1 trillion number does not represent a predicted market crash, and it does not represent expected losses, and it does not mean JP Morgan believes the economy is about to collapse. The $1 trillion figure comes from a long-term initiative announced by JP Morgan. The bank has said it plans to help deploy approximately $1 trillion into the US economy over the next decade. This money is intended for investment and financing, not damage, not losses, and not warnings of collapse. According to JP Morgan, this capital would support areas considered important to long-term economic stability. These include things like infrastructure, manufacturing, energy, technology, supply chains, and national security related industries. So when you hear 1 trillion, it is referring to how much capital the bank plans to help move into these areas. So where does the word warning come from? That comes from separate public comments made by JP Morgan leadership. These comments are about broader economic risk, not about a single event, not about a specific dollar amount. In these discussions, leaders have talked about things like increased leverage, growth in private credit markets, and investor optimism during strong market periods. These are general risk observations. They are not predictions, and they are not tied to the $1 trillion figure. Large financial institutions routinely discuss risk. They do this to identify potential vulnerabilities before problems occur. These conversations are normal, but when they are combined with large numbers in headlines, context can get lost. In many cases, two separate ideas become merged into one story. A long-term investment initiative and general risk commentary get blended together. The result is dramatic headline that spreads quickly but does not reflect the full picture. So to be clear, JP Morgan has not said a $1 trillion loss is coming. It has not predicted a specific market crash, and it is not tied to that number to an imminent economic event. What has been communicated is a combination of two things: a large-scale effort to support long-term economic investment. Second, a reminder that financial risk tend to build quietly during extended periods of market strength. When these ideas are stripped of context, they can sound far more alarming than intended. That's how the phrase $1 trillion warning came to be. So in summary, the $1 trillion figure refers to a planned capital deployment, not a projected loss. And the cautionary language surrounding it reflects general risk awareness, not a forecast of collapse. So understanding the difference requires context, something headlines don't always provide. If you like this video, make sure to like and subscribe and stay tuned for our next episodes. Thanks for watching.